It's Adrian from Morgans back here on the sidelines of the Noosa Mining Conference. So we've got Simon Wensley, CEO of Metro Mining, a very prominent company in the bauxite market. So very good timing in terms of you just delivered a record production result this week, Simon, as well as the bauxite market's been on fire. So we thought it'd be a great time to get a bit of an outlook statement from you on what's next for the company.
Yeah, thank you very much. Yeah, it's been, as you say, it's been good to catch the wave, right? We've managed to be able to ramp up production with our expansion through the back end of last year. And so we started strongly this year. As you say, it's been a record second quarter, 1.7 million tons, and that's been in a very strong pricing environment. So that's delivered us an EBITDA at the site level of about $54 million, and that's pretty close to cash flow because we don't have a lot of capital and we don't pay any tax at the moment. So from that point of view, it's a really strong result, and that's being driven by margins. So the margins in our business now over $30 per ton, so $32 per ton in this last quarter. And I think from my perspective, it's something we've been talking about. Bulk commodity, good margins and economies of scale driving that, and that's now what we're starting to see there. So I expect, moving forward that we're going to see those costs continue to come down. Our second half is usually our strongest half. So we're targeting, over 5 million tons in the second half. And so with that, we should see costs coming down. Look, it's always a bit hard to predict where prices are going to go, but I still think we're going to see a pretty robust market outlook.
And as an analyst, we love to see that, where it's good cost control, good productivity into a stronger half operationally, and the commodity is also working. What is driving the bauxite price? So that's obviously a key ingredient to you end up making aluminium from, but what's driving it?
Yeah, sure. So, top line, of course, is aluminium demand. And I know there's been a little bit of volatility this year because of the tariffs and, global uncertainty around that. But, aluminium is being used in so many applications. And the big growth, of course, is in energy, solar panels, wind turbines, batteries, and then lightweighting of vehicles, EVs and other transportation. So irrespective of a little bit of, tariff here and there, that's still a very strong underpinning demand, even over construction and so on. So, but then look further down in that, further up in the upstream in the value chain, we're really then looking at quite a specific dynamic in the bauxite space, which is supply out of China, traditionally quite a strong producer of bauxite, really falling away quite quickly. Reacting to that has been two main suppliers, Australia and Guinea. And so, but Guinea's a long way away. So that cost structure, the fact that their mines are further from the coast, all of the additional tariffs and so on that come with a developing country, that's pushing that cost structure up. And so pricing has to rise for that to occur. So from our point of view, we're heading to the bottom of the cost curve at the same time. And so that's where the margin sort of will come from, not just now, but sustainably, through the cycle. So it's a bit like what happened in iron ore when Brazil came in and reset the pricing up at that high level. So, very similar dynamic there.
Well, you're in a privileged position on that cost curve in what is a great market. So congratulations on the strong quarterly, and we hope you enjoy the rest of the conference.
Great. Thank you very much.